everyone. I'm here today talking with Matt Musilli, Vice President of Construction and Real Estate with Johnson, Kendall & Johnson. We'll talk about the risk management and insurance implications that we as property owners and managers are facing due to COVID-19. We'll talk about best practices and limiting liability at tenants as tenants begin to return to the office, as well as other topics from the standpoint of insurance carrier partners, from risk evaluation to emerging insurance products tailored towards pandemic-related risks. So hi, Matt. Thank you so much for joining me today.
Hi, Christine. Thanks for having me.
So funny thing, just to let everyone know, we've met through BizNow. We've never actually met in person. It's just this whole new thing. We did a webinar for BizNow about a couple months ago, and I just thought the information that you gave would be so beneficial for our members. So I asked you to for this seminar for us, and just really appreciate your time.
Yeah, I'm happy to be here. Thank you.
Well, tell us about yourself and what you do for Johnson, Kendall & Johnson.
Sure. So a little background on myself. I went to Muhlenberg College to play football. Muhlenberg is a small school in Allentown, PA. Come sophomore year, I was told I had to choose a major, believe it or not. And I figured I'd choose two, so I had some more options for jobs to apply for. So I double majored in marketing and finance and really had no idea what I wanted to do come my senior year of college. So I knew I wanted to get into some form of sales. I was interviewing for a ton of different types of sales jobs, recruiting, financial advising, some real estate brokerages. And, some of the companies I were talking to, I really didn't see myself at. They all seem to kind of adopt this mass hire and weed out model, which really wasn't appealing to me. Going to a small school, playing for a tight-knit football team, and also growing up in a small town too. So, I knew I wanted to explore some other opportunities. So my dad has been on the insurance company side of the business for over 35 years. He got a ton of connections in the space. So he was like, hey, let me introduce you to this insurance broker who I think very highly of. And I'm like, fine, whatever, I'll meet him. So I had no intention of really getting into the family business, if you will. But sure enough, I met my current boss and president of JKJ, Bruce White, and loved the guy, and I knew I wanted to work for him. So 3 rounds of interviews later and talking to over 20 people, I knew this is where I needed to work. I loved the culture. I loved everything the company stood for. I loved the people that I met throughout the process. And I really loved their commitment to developing the new young talent that they bring into the company. They really adopt the hire to retire approach. So JKJ is a independent, 100% employee-owned insurance brokerage and risk management advisory firm based in the greater Philadelphia area. We have clients in 48 of the 50 states and a significant international practice as well. So, I came in, kind of had free reign to decide which industry verticals I wanted to focus in. Our kind of JKJ's main areas of focus at the moment, well, at least when I joined the company, were nonprofits, so your human services, senior living, your retirement communities, assisted living communities, as well as manufacturing and kind of across the board, and then sports and entertainment. So I saw an opportunity there to grow the construction and real estate presence out for JKJ. And, that was my background. I did a lot of grunt work for a residential home builder in my early high school days, and throughout college, I worked for a commercial roofer. So, I loved doing the labor. I loved working hard, and, the dirt and the sweat and everything. So it was it was always an area of interest of mine. So I figured I might as well, take my insurance knowledge to make an impact in that space as well.
Cool. That's awesome. One thing I'm not very good at risk management and insurance, like the knowledge of it. We learn about it through our designation classes and everything, but just it's amazing all the information that you guys have to go through and learn
Right.
about. And I think one thing for us is, like, on our side in the industry, no one really falls into this. No one goes into this thinking I'm going to be a property manager. We just kind of fall into it. And so it's like we just sort of take on the skills that we already have and place it here. So anyways,
Right.
that's really cool. So what are the hot topics that are being talked about in our industry?
Yeah. So, depending on how in touch some of you may be with the insurance and risk management aspects of your company's operations, if you are in touch with it, you know that we're currently in the midst of a difficult insurance market. And difficult, I mean, it's a hard market, and that's an industry term. And I'm talking particularly the property insurance market and the excess liability insurance market. So, um, hard market is an industry term. It really describes um, what insurance carriers are willing to offer. So hard market meaning increased rates and much more stringent terms and conditions being offered by insurance carriers. So the insurance market is very cyclical. It's similar to the financial markets, but operates entirely independently from that. And the cycles are typically drawn out for longer periods of time. And we're in a soft market for the past couple decades, really, and characterized by low prices, flexible offerings, and really high competition in the brokerage side of the industry. So anyone can come in and be like, "Hey, I can get you a cheap policy, and I'll beat whatever you have in place right now." That is no longer the case. So now is the time where the high reputable brokers who sell on industry expertise and market clout and quality services that they provide for their clients, that's when we shine, right? And we're seeing prospects come to us who have had little to no losses on whether it be property or liability, but and in the eyes of the insurance carrier, they used to be a super profitable account, right? But they're getting slammed with 20 to 30% renewals on their property and 50 to 70% on the excess. And this is all depending on location and a lot of other factors. If you're in a coastal area, it's going to be a little bit more, and Midwest, you're going to be a little bit less. But anyway, and that's just because of the state of the marketplace right now. So it's that really just highlights the fact it's crucial to be with a broker who's strategically aligned and with the insurance carriers and really has the wherewithal to find some creative ways to restructure the insurance program. And aside from the marketplace, we've been seeing our real estate developer clients and prospects kind of reassess their plans development wise, and they're kind of pivoting to the development model, if you will. So prior to COVID, they were investing pretty heavily in the apartment and condo building sector. But due to COVID, they're seeing a less of a need for office space, as many companies are realizing that they're just as productive with a remote workforce, right? So these developers are kind of pivoting to this new model, flexible spaces that encompass the work, the live, and the play aspects. So by that, I mean buildings that incorporate quality living spaces, sophisticated workspaces, and some form of an entertainment aspect as well. So, obviously now most forms of entertainment are either restricted or entirely shut down in a way due to the pandemic. So people really don't want to leave their buildings anymore. And developers are really kind of changing up their planning and design to provide everything that their residents need for a happy and productive lifestyle without having to really leave their buildings. And our job as the insurance broker is to ensure that the insurance programs are tailored towards these new and more sophisticated exposures.
Interesting. Yeah, we in Dallas, our market is very much like we're seeing more product coming out that's mixed use. Just the other day, yesterday, we toured the new Texas Rangers Globe Life Field, and it's amazing, and it's connected. There's it's like LA Live, but it's called Arlington Live or something like Texas Live.
Mm-hmm.
And it's great because it's got the hotel aspect, and then you've got the big restaurant and concert everything. So it's all right there. And I'm sure that eventually there'll be apartments over there nearby, nearby the stadium, because it's just really nice, a nice area.
Yeah, absolutely. I was actually checking that out, that stadium out a week or two ago. It's unbelievable,
It's
unbelievable. I would, yeah, and I wouldn't be surprised if more teams start following suit too. It's really something special.
it is. It's 150 times larger than the Cowboys Stadium. So I have all these statistics that I learned yesterday that
Yeah, it's unbelievable.
it's amazing. Um, so anyways, so the next question, is there ever a time that for property owners and managers to be too transparent when communicating to the tenants?
Yeah, so for those who may have tuned in to the Biz Now webinar that Christine and I were able to speak on, I kind of covered a little bit of this, but I'm gonna go over it again here. So when it comes to owners limiting liability regarding COVID-19, there's really no such thing as being over transparent or over communicating with your tenants and also your insurance brokers and insurance broker and carriers. You want to have everything on record. That's really it. I mean, any updates you made to the building, whether it's reconfiguring the office space or adopting a new formal cleaning and disinfecting plan, or enhancing the HVAC system to maximize fresh airflow to the workspaces and really optimize the building's ventilation, or adopting a response plan for in the event that somebody becomes ill with COVID like symptoms. You want to have detailed records of every COVID preventative measure that you've taken as a building owner, right? So you want to make sure that you can show, like physically show that you have abided by these COVID physical distancing guidelines and your new protocols, and you want to make sure that you selected and you're using the appropriate cleaning products that meet the EPA criteria for use against COVID, and you want to ensure that the proper filtration is being used in your HVAC system, not only for normal office, but for what's recommended for COVID transmission control. So interestingly enough, funny story, about a month ago, I'm with my brother and he's on a Zoom call for my nephew's school's reopening. And I'm sitting next to him while he's on the call, kind of tuning in and out. And they start getting into the risk management protocols that the school has adopted. And of course, I tune in, do a little bit of that because I'm an insurance geek. And they start talking how they've upgraded the vents in the building for with MERV 15 filters. So I didn't really think much of that at the time, but a couple of weeks ago, I'm on a loss control call with one of our loss control engineers, and for one of our large healthcare clients, and he starts discussing how MERV 13 or greater is recommended for healthcare now. So that just tells me that the precedent's been set, the bar's been raised, right? So let's say you don't upgrade your HVAC system to meet these recommendations, and there's a COVID outbreak in your building for whatever reason, and it ties back to the HVAC system or filtration in your building. Well, it's been known that you should have been using MERV 13 or greater filters in your building. So that's going to make it a whole lot difficult to defend yourself in the case of liability, because everybody knew this, but you chose not to adopt it, right? So another thing to consider with all this enhanced cleaning and disinfecting, it's going to increase the chemical emissions throughout your building. So that's just one more reason calling for an enhanced HVAC system with upgraded ventilation. So, as I said, you want to have detailed records of all the upgrades and precautions that you've made and you're taking to minimize the chances of COVID transmission. Records detailing the cleaning and disinfecting that takes place in all areas of the buildings. Records identifying any upgrades you've made to better protect your tenants, such as the HVAC systems. And so, God forbid, when the time comes that somebody in your building contracts COVID, you'll have all the records on hand to defend your case, show that you've adopted all these preventative measures that that are now known as the best practices, and that you've made every effort possible to minimize this risk.
So do you think that, because you kind of talked about um, the guide to like what our policies are that we've provided to our tenants and everything, and then just what we're doing in general, do you suggest that it's something we should have our insurance broker review just to be open with them about?
Yeah, absolutely. I mean, throughout the last 6 months, your insurance brokers should have been with you every step of the way. I mean, this is entirely related back to insurance. I mean, most things in this world, unfortunately, are. But yeah, absolutely. I mean, our loss control engineers have been busier than ever the past 6 months. I mean, putting out content and kind of mass email blasts of what we've been seeing, what you guys should be doing, and across various industries as well. But obviously, we're focused on commercial real estate here, and uh, you know, tenants can vary by operations, but in terms of property owners and managers, absolutely, your insurance broker should be involved in the process and giving you. Oh man, hold on, I apologize. My
That's
lights went
okay.
off in here. Uh,
Oh no.
it's the automatic lights. Hold on, give me a sec. Oh jeez, that's
Cool.
the worst, isn't it? All right, here we go. Back
It
on
is.
track.
I have it in my office, and I like sometimes I'm like waving because
Yeah, I'm like,
I'm here, but
oh,
I've
that's
got my
funny.
window, so when it turns off, you can kind of only tell a little bit.
Right. Yeah, I'm usually in a different meeting room when I'm doing these Zoom calls, but somebody was in there, so I had to change up locations a little bit. But
Well, I like
um,
the painting in the background too.
I always like to have a painting in the background. I really do because it's an attention grabber, right? It's like,
Yeah, well, that
huh,
one's like so awesome because it's buildings and it kind of looks like you're in Miami, really,
right.
because the palm
I
trees.
wish I was.
I know. So, okay, so we'll go on to the next question because so what should we expect any changes in our policies due to COVID-19?
Yeah, so changes in the policies, absolutely. I'm going to discuss that briefly, and I'm going to go into new products that are kind of coming out as a result of the pandemic. So, there's always been communicable disease exclusions on property and liability policies. You just really haven't either paid attention to them or seen them because they're kind of tucked away, deep in the conditions part of, or excuse me, deep in the exclusions part of your policies. And what COVID has done is, and what insurance carriers are going to start doing is just make that extremely explicit, right? They're going to smack that big letters, communicable disease is excluded, including COVID-19 and any other related types of diseases. So, yeah, I mean, carriers are just going to be much more upfront with these exclusions and make sure that everybody knows that it's excluded because there was a lot of back and forth these last 6 months. Whether insurance carriers were going to pay these business interruption claims. But with that said, there's going to be a lot of interesting pandemic related insurance products that arise out of that. So they're not going to want to cover any form of losses resulting from a pandemic in your standard property or liability policies. That's just the truth of it. However, they're going to start making some specific products tailored towards this risk. And it's interesting. Prior to COVID, there really weren't any insurance products out there built for pandemic related risk because, quite frankly, that's not, well, one, the risk wasn't seen as realistic, and also that's not what the insurance mechanism is really built around. It's built on the law of large numbers and a spread of risk, and that certainly pandemics do not fit that mold. So the only product really covering this type of risk that ever gained any type of traction was in the form of an event cancellation policy. So back in April, I'm not sure if you've seen this, but Wimbledon was one of the few major sporting events that was canceled and did receive coverage for their COVID-19 related losses. And this is because they paid tens of millions of dollars over the last 15, 20 years to have this policy in place. but they never needed it. And sure enough, 2020 comes like wildfire, and it paid out 35 million. I'm not sure the exact number, but so that was just an interesting little fact. Anyway, as you can imagine, there's a ton of new insurance products arising for future pandemic-related risks, excluding COVID, but most of which are coming out of Lloyd's of London, Lloyd's, for those not familiar, kind of on the forefront of insurance, usually covers the trickier, more difficult to place risks that you can't really place in the standard insurance market. So, one coming out from one of our wholesale partners over in London, who we have a very close relationship with, Miller, has developed an epidemic risk insurance product. And this product is going to provide non-physical damage business interruption coverage for the loss of profit due to a pandemic outbreak. So the non-physical damage is an important factor here, because all property policies require a physical damage aspect to trigger the business interruption coverage, right? And as we know, that was not the case with COVID. That's what it's whole back and forth over the last 6 months. Well, really more so early on in the pandemic. That's what all this back and forth was about. Does COVID constitute as physical damage due to the nature of the virus, because it stays on certain services like metals for over 24 hours or so. So that a lot of back and forth ended up not materializing to anything. However, these new products are built exactly for that. So this product will cover lost profits due to the pandemic, as well as crisis management costs up to 50K. That's a sublimit that we're seeing mostly across these policies. So these crisis management costs include risk mitigating costs and efforts, such as extra expenses to ramp up the hygiene purposes, and also media costs to kind of restore customer confidence. So that's just one of them. That's our close partner over in London, as I mentioned. There's a few others coming out. Munich Re developed an epidemic risk transfer product. And interesting about that one, there's a couple options available for that. One is on a named pathogen approach. Another one's on an unnamed pathogen approach. And then, so both of these products have indemnity periods set for 3 to 6 months, and will cover a pandemic period for 6 to 9 months. So that's just two of them. There's a few others coming out. We've heard talks of another one coming out of Boston, a wholesaler out of Boston who teamed up with the Lloyd's of London syndicate to create another pandemic protector product, similar to the two above. But this one, however, is the lowest minimum premium that we've seen, which is $35,000 for a $1 million limit. So that might seem a little crazy here, but it's important to consider these products are going to be costly. There's no doubt about it. There's really no spread of risk when it comes to pandemic, so the insurance carriers must price these accordingly. So it's really up to the insurance buyer, the company itself, to weigh the cost of these products against the possibility of a future pandemic and the significant profit loss that comes with it. So, yeah.
Interesting. So a couple things that came to mind as you were talking. One of them, just I'm thinking back, like, I know the pandemic has been bigger than the other diseases that we've come across, swine flu, Ebola, and that I guess it's just because this just has affected so many people, so many more, that they are coming up with these new policies, products for us. So, which is great. I think that's really good. One quick question: how quickly do you think that these new products will be available to people, to us?
These new products are already available at the moment.
Okay.
Yeah, like I said, Lloyd's of London really at the forefront of it. That's who you're going to have to go through or go to, or who your broker is going to have to go to secure these products. But yeah, these are certainly available at the moment. With that said, these products are in their infancy, absolutely. So there's still a lot of figuring out to do. But yeah, by all means, these products are available, and your broker should be talking to you about them.
Okay. And then kind of going back to what you had mentioned, I think you said because these are more for non-physical, like non-physical
Yep.
damages,
Yep.
because it was like, because you mentioned before about a story, like, or giving us an example about what that really meant, like, because you can't see the actual COVID-19 on a elevator button or
Right.
whatnot. Can you kind of elaborate on that just to give us an idea of like the differences between a little bit more on the business interruption to the fees and
Yeah. Yeah. Absolutely. So, all right, let's give you an example here. So your building burns down by a fire. You can't get into it anymore. And you're a retail business, okay? You're going to lose a lot of profits because you don't have anything anymore, right? Your customers can't come in and buy your products. You don't have a website. You're just one physical location. So the fire is the physical damage that triggers your business interruption policy to pay over whatever your indemnity period may be, right?
fees.
And so COVID, there's no physical aspect to that loss. However, it affected everyone across the board. And also, due to government mandates, nobody could go into your store. So you were still losing profits, although the store was still standing there in great shape, all the inventory still sitting there. So that's where the non-physical aspect comes into play, because I'm sure you may have heard kind of early on. I would say like March, April, May. There was all this talk going between the insurance carrier side of the business as a whole, and then the government. It was kind of a chess match. That's what I was calling it, because one side was saying, listen, the insurance carrier side was saying, listen, we never intended to cover this. Read our policies. This was not meant to be covered. We were not pricing our policies to cover this exposure. And the government was saying, okay, well, this is a business interruption policy, and all these businesses are interrupted. So what's the point of them paying all this premium if you're not going to pay out these losses?
Mhm.
So that, I mean, that it all comes down to the fine print, right? And yeah, it always does, right? And yeah, so any disease will not constitute as a physical damage. It doesn't, and
Mhm.
that's what these new products are here to cover.
That's cool. Yeah, I did. That's amazing. Now I remember us saying back in March. I mean, we have it in videos saying how it was like, well, most likely hopefully it'll be under business interruption. And so now, and just like 6 months later, it's just interesting how much everything has changed. Our knowledge of just one little thing that has just made a huge domino effect on us.
Yeah, there was a really interesting stat, Christine. It was like, um, total premium collect or total. What's the term? I want to say surplus of that insurance carriers have waiting to pay out for losses. Let's
Mhm.
say it was 500 million. The total of business interruption claims was like 800 million. So there was not enough money, like I'm talking the insurance carrier side as a whole. There was not enough money to pay out all the losses that were being claimed. So it was never really a possibility, because you can't have every insurance carrier in the world going insolvent. What's going to happen there?
Yeah.
Yeah.
Oh my gosh. It's almost like with the banks, like back in
Exactly.
2008, just with the
Exactly.
insurance.
Yeah.
Oh my. Um, okay, so as it pertains to the liability of the landlord, or even for the employers, what sort of effect is there for those that are in states where they've already passed legislation on liability protection for business?
Yeah. So this is a great question. This is an interesting topic. I'm not sure how much of an effect it'll have on landlords, because from their standpoint, it's all about the contractual risk transfer. And, even if the state passes laws of that nature, and I know 15, I was trying to get the actual number before, I'm sorry. I think it's about 15 states have passed some sort of liability shield. But regardless of the liability still lies within the contract from a landlord's perspective. So um, it'll be interesting to see as case law arises surrounding COVID, because it's still in its infancy. But that'll be a good telltale sign here of how much these liability shields kind of hold up. But however, it's really crucial for landlords to work with their counsel and insurance brokers to structure these contracts to make sure that they are transferring the risk down to their tenants every single time, because the tenants are the assuming parties of this risk. So this legislation is pretty much saying you can't sue these businesses or employers due to COVID. And these laws really aren't geared towards the landlords themselves. It's kind of geared towards the individual businesses who are the tenants of the landlords. And the laws that are being passed here aren't meant to pass the liability to somebody else. It's really meant to just stop the lawsuit in its tracks as a whole. So these liability shields are intended to provide certain immunities from liability claims regarding COVID and prevent lawsuits brought by people who contract the virus, right? And under specific circumstances. So, these 15 or so states who began enacting such legislation, they're all similar wording and kind of say the same type of immunity type language. However, it's going to differ state to state completely. And we've really seen that these legislations help, but they do not by any means exonerate the employer's duty to maintain a safe environment for the employees and their customers. So it goes back to the being transparent and documenting all the protocols you've taken in place, kind of work hand in hand, right? I mean, if you're in a state that grants immunity and provides this liability shield, you're going to still want to keep all this on record just in case, because we're not entirely sure how well that these are going to hold up in court, just because, like I said, so much in it, it's very much still in its infancy. We've seen some of our clients adopting the liability waivers, which can help certainly, but you can't solely rely on them. So it's important to consider too that the liability waivers, if you give your customer a liability waiver here, you're basically saying, I got nothing to do if you get sick. That might rub people the wrong way. So with that said, I think it's important to consider that we don't really know at the moment what's going to happen with these legislations, and it's better to play it safe, document everything, adopt the best practices, and make sure you have a safe environment for employees and customers.
Yeah, that's good. And it's good to know. I think because so in Texas, because we haven't we're not in session, and we won't be until January. And so I just want to make sure that our members know that, know it's out there, and know that we can still, maybe after the election, inform our legislators about this and see if it is something that would be looked at.
Right.
So it'll be interesting.
Yeah, it will be interesting.
So what do you think is the biggest risk that property owners are facing?
So no matter what, across the board, regardless COVID or not, contractual risk transfer is always the biggest risk faced by property owners, commercial landlords, you name it. When contracts aren't structured in favor of the property owner, in favor, I mean transferring the risk down, they can assume risks that they absolutely should not be, because there's other parties who were at the time of a loss or an event who were better equipped to mitigate this loss. So, oh my gosh, I'm sorry.
That's okay.
The lights again. Yeah, so there was somebody else in a better position than the commercial landlord or the property owner at the time of the loss or event. And it's important that every single contract is structured in a strategic and ideal way for the landlord to transfer that risk down. And it's important that your broker plays a significant role in the insurance and indemnity provisions of these contracts, and you're made sure that you're held harmless by your tenants in the case of some sort of an event. And your broker, like JKJ, we play a large role in the structuring of these contracts, and you should be reviewing these with your broker and your counsel and configure these in a strategic and meaningful manner.
Good. Hmm. Very interesting. I'm in the back of my mind, I'm thinking about our like our service agreements that we have with our vendors, and it was always like I always hear, oh, that's very landlord driven, very landlord.
Yeah.
So that makes total sense. Why?
Yeah, I mean they do have the power most of the time. So
Yeah. So what? Okay, as far as it goes, relates to fitness centers and COVID. I know, like, a lot of our buildings have fitness centers as because of the whole amenity war, and that was one of the things. And so, what do you see as it relates to those? I mean, and maybe it's kind of the same thing.
yeah, it's interesting. So back to the contracts, it is very much, within the fine print. You have to make sure the contract is suitable for this property owner from a risk transfer standpoint. But also, property owners have to make sure that their tenants, being the fitness center, they have adopted approach to disinfecting and cleaning, and have adopted these best practices and have been actively cleaning throughout the day. And so we actually have a pretty large property owner client who owns a lot of Planet Fitnesses down the West Coast, and they actually have implemented a decontamination personnel team. So they'll literally be standing in one of the corners of the gym. They'll see what equipment's being used, and immediately when the person who's exercising puts that thing down, they are scrubbing it down. So a lot of our we've been seeing a lot. I go to the gym still, I wear my mask, and you see everywhere like, please wipe down the equipment after using. And that was even before COVID too. But yeah, that is just so much more enhanced than previously. And in terms of the fitness centers themselves, they can consider using the liability waivers that we discussed before. Another thing we've been seeing is consider having their customers set up appointments to use the facility, especially in urban areas where foot traffic is high, to ensure they're not going over the mandated threshold and so there's not too many people working out at once. And also to ensure that the decontamination personnel, if and when the fitness center chooses to implement that team, so they can manage who's there and who's using what equipment. So
That's interesting. You said decontamination teams because, like, I've seen the restaurants doing that,
oh yeah,
and they've been, it's been on their Instagram, and they have their white coats on and gloves, mask, everything, and they're ready to go as soon as
yeah,
their guests leave.
yeah.
So,
Yeah, they're basically hazmat people. It's crazy. I mean, going in with
yeah,
the shield and everything. Yeah.
yeah. So one last question that I had for you. You talked about your loss control engineering teams and them, and that how they do their inspections on site. Do you think that their checklist is going to change now after COVID?
Yeah. So, I wouldn't say it's going to change so much. I would say it's going to evolve to address these new COVID related issues, because, you know, just because COVID happened doesn't mean that other types of insurance losses are just going to stop on us. Right. I think we saw that kind of throughout the entire last 6 months. So, but yeah, Absolutely. Our insurance, or excuse me, our loss control engineers are going to be working in tandem with the insurance company loss control specialists to, identify kind of the stuff that we talked about. Right. Let's see what type of HVAC system that this building is using. Is there room for upgrades here? Is there any way we can improve the layout of the office here, whether it be, throwing these big plastic barriers in between the cubicles, or, proper signage, identifying, hey, listen, um, only so many people are allowed in this elevator, right? Maximum restrict or maximum capacity in certain meeting rooms. So, yeah, I mean, there's going to be a whole slew of things that our loss control engineers are going to be addressing, in terms of the new COVID-related exposures. But yeah, still the same loss exposures that they were identifying prior to this. But yeah, it's just going to be a new evolved checklist, probably a separate COVID-related checklist. And yeah, our loss control engineers have been busier than ever in the last 6 months, putting out great content. Little quick risk control, quick tips, and all types of stuff of that nature. So yeah, I mean, and I will say that's just from our perspective. From the insurance carrier perspective, they'll certainly be looking at renewal, or if they're taking on a new client, they're going to be looking for certain things and certain protective measures that you, as the property owner, have in place before they end up, uh, quoting your business, because they're not going to jump into anything without having full knowledge of it.
Mm-hmm. Cool. Interesting. Gosh, I can't believe we've already talked for like more than, I don't know how long it's been, 45
Yeah,
minutes,
right.
because it's just so interesting. Like I said, I'm not exactly the greatest at risk management and insurance. I know the basics, but it's
Well,
just
by no, you shouldn't be the best.
that's true.
You have enough to deal with on your real estate side of the business. That's where I come in.
Well, Matt, it was such a pleasure to speak with you, and thank you for teaching us about risk management and insurance. And you made it so much more easier to understand. And when this is all over, I hope you do come down to Dallas and visit us in the South, because we most likely will have warmer weather than
Oh yeah.
Pennsylvania. So, but yes, so thank you so much.
No, the pleasure is mine, Christine. I always appreciate doing these types of speaking engagements, and I'm happy I had the opportunity to speak to Bowman Dallas. Great group, and any questions at all following this speaking engagement, please don't hesitate to find me on LinkedIn, or shoot me an email, shoot me a note, whatever you feel, and then I'll get back to you as soon as I can.